Can you guess which Southern California county has the most expensive homes and has homes moving the fastest? You're probably hearing in the national news how inventory is increasing. Is Southern California following the same trend? We are going to share with you in the Southern California Housing Market Report. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping the smartest buyers and sellers make the best data-driven decisions in this crazy market. So if you're ready to dive into the single-family and multifamily numbers for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button and let's get started. And here we go, diving into the single family data for Southern California. We're looking at the first half of March and we're going all the way back to 2018. Lots of numbers here, lots of data. We're showing you sold. We're showing you the properties that are under contract, which is demand. And then supply is the number of new listings. First thing I want to point out is look what happened in 2020 in March. That's when COVID hit and we went into lockdown in March. You can see the drop we had in that first 2 weeks, number of properties going under contract. So in the first 2 weeks, just before the lockdown that we had in Southern California, at least Orange County, we can see that the number of properties going under contract had dipped. New listings had dipped as well, but not quite as dramatically as we saw the dip in number of properties going under contract. Then COVID, and we had our huge surge, and then 2023, 2023 was a terrible year for the total number of sales. And we can see that now as we're getting into 2024 that things are getting better. We're nowhere near where we were in normal years, nowhere near the crazy COVID years, but things are turning. So we can see the number of properties going under contract has increased year over year. And we can see that the number of new listings, that's down slightly year over year in Orange County. Those numbers very close together. And Orange County happens to be the most expensive county for single-family homes in the 6 Southern California counties we cover. And we're going to show you just how quickly, when we look at the Altos Research data, how quickly the bottom quartile of the market is moving. It's crazy, crazy fast. There's your hint. Moving into Los Angeles, same trend you will see in every county. You can see that dip in 2020 at this time of year. We can see here that we have an increase in the number of properties going under contract and an increase in the amount of inventory. Things are thawing despite these crazy high interest rates, and they're running in parallel, these two lines. Supply and demand coming and going at about the same pace, so we're not seeing a huge increase in inventory like you may be hearing in the national news. They're talking about, increases in inventory. Yeah, we're seeing an increase in inventory in Southern California in these counties, but it's also being sucked up as it's going under contract. Riverside, similar thing, year over year up for all these important numbers. San Bernardino up. Now we could see the number of closed sales is relatively flat year over year, but we can expect, because we're seeing an increase number of properties going under contract, we're going to continue to see the number of properties sold going up. Ventura, a slightly different story. So we can see an increase in number of new listings, not as many properties sell because there aren't as many properties in Ventura. And we can see the number of properties going under contract is relatively flat year over year. And the number of sold properties is down, and that number will continue to go down because we're seeing our pending sales staying low. So Ventura always marching to its own drummer. San Diego, that poor market that everybody was picking on in the national news as being overvalued. It was going to crash. And we can see, just like recession talk has essentially disappeared, the picking on San Diego talk has disappeared as well. We are up in number of properties going under contract and up in the number of new listings, slightly down in the number of closed sales, but with this increase in number of properties going under contract, again, we'll see an increase in closed sales. And these numbers relatively close, so demand and supply staying in check in Southern California. I can tell you dig data like we do because you're still watching. Don't even think about buying or selling a piece of real estate in Southern California without talking to us first. Diving into the multifamily data for Southern California, one of the only places you're going to get it, we can see that there's a big increase in the number of new listings, only eclipsed by 2019. These are a lot of properties coming, and we don't have the huge number of properties going under contract. So we can see this big gap between number of new listings and pending sales. What can we attribute this to? Well, the fact that interest rates continue to remain high and make cash flow difficult. So when you add up all the expenses to the property, you add in the debt service, and you subtract that from the income, what's left over is cash flow. When the debt service is a big number, it makes it tougher for cash flow to flow. So you end up with properties not penciling quite as well. Moving into Los Angeles, we can see the pending sales are up slightly, inventory down a little bit, still a big gap. And actually a bigger gap than when we were here in 2022 and 2021. There were more properties going under contract then, and you couldn't evict for people not paying rent at that point in time. Riverside multifamily, a crazy roller coaster, lots of different loops. Number of new listings is matched to 2021 and down. Number of pending sales up year over year, relatively stagnant as compared to other years. So interesting trend we're seeing, and a result of the difficulty in having properties cash flow. San Bernardino, we can see pending sales and new listings relatively close, so up year over year for both of those. And we're going to be getting into nicer weather in San Bernardino, so we can continue to expect to see sales theoretically. Ventura, always all over the place, but look at this. We got new listings and pending sales matching. That's one of the first times we've seen this in recent months. So things are moving along for Ventura multifamily. San Diego down. So while Orange County was up at record levels, we can see that San Diego's at a record low for inventory other than last year, up slightly for new listings, and pending sales are up year over year. In fact, at a higher pace, they're going under contract than the normal years of 2018 and 2019. So that is an interesting trend to watch, despite the interest rates, as we were talking about, slowing things down in the multifamily market. San Diego is moving along. Jumping into the Altos Research Reports, I want to show you a couple of important statistics. Properties with a price decrease. So the dots represent year-over-year data. This is the national data. And you may be hearing this in the national news, where we're starting to see more inventory, and this extra inventory is leading to price reductions. So at a national level, we have about 31% of properties that have decreased their price. That seems to be a relatively big number, and we have to put it into context. We can see it about matches year over year, and last year at this time was a slower time, nowhere near the record lows that we had during the crazy years. And 2020, we know as well, those numbers were off. So we're going to go all the way back here to the last normal year, and that is 2019, so 28.25. So at a national level, we are actually seeing more properties with a price decrease than we saw during more normal years. So that's important to follow. But then you have to go local. Moving into California, and you can see about 23% of properties have dropped their price recently. That is down year over year, but nowhere near these record lows. Wow, crazy low number of properties. Oh, by the way, this big increase that we saw in price reductions here, and you'll see it on every chart, that's when interest rates started to march up around the time the war with Ukraine started, and they continue to go up at that point in time. And going back to a normal year, we are below, at the statewide level, we're slightly below the number of properties that are dropping their price as compared to a normal year. Orange County, we can see only 18%. That's pretty low, and it is definitely below where it was in a normal year at this time, about 32%. So definitely a lower number of properties as compared to a normal year, and down year over year. Another important thing I wanted to share with you, actually two more things for Orange County. Look at these quartiles for single family homes. So the median price for the lowest quartile is $1,045,000, and look at how fast they're moving. Right now, anything $1 million or less, that's a house, is selling within a week. That is crazy, crazy fast. Even the next quartile is 2 weeks. So you can see, other than the very top of the market, things moving very quickly in Orange County, the most expensive county in Southern California for housing. Los Angeles, we can see about the same year over year, down slightly, but below where it was during normal years, and stuff at the bottom of the market moving quickly. Not as fast as Orange County, but moving quickly in LA. Riverside. Now, Riverside is one where down year over year, but not too terribly far off of where they were during normal years. And if you look at how fast things are moving, the middle of the market is moving fastest in Riverside right now versus the bottom. So a different trend for Riverside homes. San Bernardino and Riverside running almost in lockstep, down year over year, but not too terribly far off of where they were in normal years. And another one where the middle of the market is moving fastest, not as fast as some other places. The bottom of the market, the most sluggish, even more sluggish than the top of the market. So that is a very upside down trend, you could say, for real estate sales. Ventura, and you can see this chart's more jagged. That's because there's fewer properties to smooth it out. About 10% fewer properties dropping their price. And look at how quickly things are moving. The bottom half of the market moving within 2 weeks. So Ventura, not as many properties like we always talk about, but that bottom half of the market moving like gangbusters. San Diego, down year over year and down from that more normal trend. And another one, things moving crazy fast. 3/4 of the market moving the fastest, with 2 to 3 weeks gone in San Diego. So definitely a hot spring season for most of Southern California. Sign up for the Altos Research Reports and you're going to get our free weekly email newsletter delivered every Sunday. The next thing you need to know is in this video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.